Good afternoon. Good evening, everybody. Force of habit. I keep reverting to our afternoon sessions back with Think Markets. Good evening, everybody, and welcome to another edition of Live Market Analysis. It's so good to be here with you in what has been a fascinating market, which I must admit has had me jumping at shadows over the last 5 trading days, but we'll talk about that after we talk about the disclaimer, which says that everything we're going to discuss today is information. It has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this information, you should consider it carefully, or if you prefer, seek the help of a financial professional to determine its appropriateness for you. It's also important to remember that trading is risky, investing is risky. Markets go up, markets go down. There's a chance you could lose money, and as always, you make your decisions about your money, not me. You're responsible for everything you do with it. With that in mind, let us head over, or you should head over to your chat window, and you can type in a stock, an index, a commodity, a crypto. It could be anything from the universe of charts. And I'll give you my best technical analysis reader, or if you prefer, we can talk about trading, the methodology, the money management, and the mindset side of things. Let us head over to the charts first and foremost. I'm going to start with where I normally start, which is the Nasdaq. And I haven't updated all my little lines and things today. Actually didn't have a chance, but we're pretty close. For example, I would ordinarily take that and move that over there, so it lines up, and take that and move that over there and make sure they're perfect. And draw in any new peaks and troughs, which we don't actually have any since I did last update it. Where I left you was here. That would have been last Friday session. In fact, it absolutely is. And I said something along the lines of, look, I think for all intents and purposes, this little pullback correction we've had has run its course as far as I can tell. I don't know what's going to happen next. But we can start to move. Let's not all go back to, I think we're at 1/3. Let's not all get back to 2/3 immediately, but let's start making our way towards there if we see opportunities that we do want to add risk to. And I would have said on that session there, that was Monday, thinking pretty happy about that call, thinking, okay, yeah, no, that's a pretty good candle. And then we got that one, I thought, oh God, here we go again. And I got that one, I thought, that's it. we're cactus. It has absolutely sold me the dummy. There's the lower peak I was worried about. I mean, this 2 candle pattern we know is very, very indicative of excess supply in the system. I mean, demand really didn't put up a fight on that day at all. And then when demand did put up a fight on this day, and demand put up a fight because we got that upper shadow. So at some stage during that trading session, the one with the blue line through it, demand is powering back up. It's here we go. And everybody's excited that we're still in the bull market. Everything's hunky-dory, but something happens in the market. I don't know what happens, nor do I care, but something happened in the market to bring the supply out. The supply said, fantastic. Look at all that demand coming in. Because I need demand to offload all my shares, and boom, that's a great price as well. And supply smashed that demand all the way back down. And I would have said, and I will continue to say, I think I put a tweet out on that day and I said, look, these 2 candles are not good candles. And I'll say 8 times out of 10, 9 times out of 10, these 2 candles together in this sort of pattern formation are extremely bearish. I'd say 8, 9 times out of 10, we should see a follow-through session to the downside. And then, boom, miraculously, nothing to worry about, nothing to see here. But I do think there was an FOMC meeting on that day which changed things. And that's what technical analysis is all about, and also what it's not about. It can't see the future, and it can't see those fundamental things that occur to change the market's thinking and to change the amount of demand and supply in the market. So we just roll with the punches, hang in there like the cat poster, of course, and deal with the new candle we have and work on the information that we have now. And that candle is very, very bullish. And what is even more important about that candle is it occurred after such a bearish pattern. Because you've got to imagine a lot of traders out there looking at that going, and not us so much, because we work on the basis that, well, we're still long sold. We've still got 1/3 in the market. We're working towards 2/3. We're not short sellers in this sort of market. You know what I mean? We're not. And you will see them out there, commentators and people in social media. Oh, the market's too high. This is crazy. Stock shouldn't be doing what they're doing. Haven't you heard about X, Y, and Z? Rubbish. Anyway, we follow the trend, right? So it was never a case of we're going to short those two candles, but there are people out there that don't think like us, that see those candles, they want to go short, and then think about how they feel on that day there. And this is the point, it's an important point. When you have these lock patterns and then they turn into something equally as bullish the next day, you get pressure. You get pressure put on the supply side. That supply who's short doesn't want to be short anymore, and that manifests itself in a big burst of demand the next day when we open, we gap higher. And that candle's fine. I don't know what's going to happen next. We could get two more black candles. But, you know, reading this as a book, I don't see any reason to change what I said to you last week, which is if you see the risk, I think you can put it on the table for now. Okay, that's all we want to achieve. Looking at that chart, and then we'll look at some of the other ones and say, okay, well, am I seeing anything to contradict that idea? Because I do like to use the Nasdaq as the basis for my portfolio management, but if there's something that's contradicting that, particularly in the Russell, I might belay that order. Okay, belay that order. I've been watching a lot of Star Trek reruns lately, including the new Picard series. I don't know if anybody is as big a nerd as me that's been watching that, but I do love that stuff. Now, we're looking at the Russell. We're not seeing anything too sinister going on there, and nothing to make me want to change anything I've said to you before that. S&P 500 is fine. Nothing wrong there either. Let's head to Europe. Doesn't look as good over there on the French 40. Let's check out the DAX. That's the more important market. Not as bad. Why doesn't it look good? I've said it. Why doesn't it look good? Well, obviously this is a major peak now, and potentially we're making another major peak here. I don't know yet, but it's not formed. Where will it form? Well, it would still need to do a little bit because this peak is still higher. Okay, that's not what I wanted to do. Let's go back here and get an arrow, and at least it's not dashed this time. So that peak is still higher. But if we form a peak here on this candle and do something like that, then we could be in lower peaks in the not too distant future. That's why I'm looking at that. I'm not as happy with it. That's the Stocks 50, so that's more European stocks. Well, they're more European stocks, but they're stocks from different countries. The top 50. The FTSE still looks very good, and Spain, neither here nor there. So no major red herrings. I should zoom out and get to our typical zoom. And I can't see anything here, which is particularly bad going on. On the contrary, actually, finally, we haven't been able to say this for so many months now, bordering on over a year. Asia is not a drag. If anything, Asia is a tailwind now. The Hang Seng Index there looking very, very strong. Sorry for the bangings in the background because people forget sometimes that I do broadcast at this time of the evening. The Nikkei is okay, isn't it? That's had a bit of a bigger pullback there. Maybe Bank of Japan related. I don't know, but otherwise nothing sinister going on there. The Nifty 50 is okay. Nothing sinister going on over there. And we've got the Shanghai Composite, which doesn't have today's candle actually. So I'm not sure what's happening there. I should have that by now. I'm pretty sure they did trade today. Somebody can correct me if I'm wrong, because I know the lithium market was open today. I know they're in. They've just had their May Day holidays. Whether today's a holiday or not, I don't know for sure. I'm just making sure I've got the latest data for you. I'm clicking that off screen, and we might see that candle appear. And it hasn't, so maybe they didn't trade today. But that is still fine. Obviously, they haven't traded since Wednesday last week, or Tuesday last week, to be more precise, and that's fine as well. So all hunky-dory there, no complaints. Bringing it back home, we're still doing what we would expect this market to do. So there's nothing really unusual going on here. We are holding above the long-term uptrend ribbon. We're vibrating in a range that's defined by 74.92 and 77.24, 77.41. Whilst we're in that range, there's nothing to see here. If we can close above 77.41, I think we will go back up, and we will at least test those record highs, if not make new ones. Of course, if we break below 74.92, we're in big trouble. Let's hope we don't get down there. Otherwise, that's fine. No complaints there. While I'm here, what else can I look at? Let's look at base metals. I'll go onto the line chart here for you, and might zoom this out a little bit more. So aluminium, we've had a pullback, haven't we, since the last time we spoke, but only to the short-term uptrend ribbon, so not panicking just yet. Copper is still okay. We're still high peaks and high troughs. Obviously, the price action is not as good as it was. So you know now how to look at that chart and say, okay, it's good, but it's not as good as it was. Okay, so it's not as good as it was through here, where we're making sort of high peaks and high troughs. That's good price action. But the last trough is at or above the second from last peak, right? And then we kind of get to a point here where they're starting to overlap each other. Okay, so we're not getting that desperation on the pullbacks to jump in. The demand side is a little bit weaker, a little bit more timid, and at the same time, because we're pushing through what should be a point of demand, and the point of demand is here. I'm going to highlight it for you. That's the point of demand. We're pushing into that point of demand. The supply side, therefore, probably more powerful, but still largely intact and hovering at old points of. You can't see that because we need to go to the auto chart. Then you can see that there is a peak there. Okay, it's not visible on the close only chart. That is supporting price at this stage. Let us head over to nickel, starting on the weekly chart there, heading into the daily chart. Still looks fine. In fact, if anything, this long-term uptrend ribbon potentially now providing dynamic support. That's a good sign. Lead, we're just looking for, again, red flags here or things gelling together. So base metals as a group are still strong. And I still think that's the case. Tin ideally will hold that short-term uptrend ribbon if it closes beneath it. Not only are we already in lower peaks and lower troughs, that's interesting, but beneath that short-term trend ribbon, the short-term trend will be over and we'll be in something more like this. We don't want to see that. So that's interesting. And that's still fine there on zinc. So a little bit more of a mixed picture, isn't it? We're out of those few weeks we had where everything was just going gangbusters, a little bit more uncertain. We'll have a look at gold on the other chart as well. But while we're here, I'm of the same opinion as I was last week. I can't see a scenario just yet, just given the candles we have, where gold's going to run away and print new highs and do amazing things. Okay, if anything, more of a sideways, maybe even it is at risk here of potentially closing beneath that short-term uptrend ribbon. So there are some problems there. And silver looking just as uncertain as gold. Okay, so if you're reading, and there's so much rhetoric out there about gold at the moment, of how bullish things are and where it's going to, 3,000, 5,000, 10,000, that's obviously not true, is it? It's rubbish. Let us head over to the trade view charts now. I'm going to switch screens here, and we happen to be on Bitcoin, so we might as well talk about it. And I think last week I said something like, you could do, it's like a reverse trade. I don't know if that's the right word for it, where you sell because you're a bit uncertain about where it's going, but you don't want to miss out if it does pop back up, right? You're kind of taking an option, and that's actually a really good way to describe it. You're taking an option on a rise. So you will sell it and you'll put a buyback just above the next point of supply, right? And I think I said, look, somewhere up here, okay? And what you're risking, and it was somewhere around about here at the time, it was certainly before that dip, and you might be risking that much, really. And that's all you're going to miss out on. Of course, the risk is it goes up, tips you back in, and then collapses, right? And that's Bitcoin, probably will do that. But just conceptually for the trade it's, look, I'm not certain, I kind of couldn't be bothered, but I don't want to miss out if it goes back up. So I'm exiting here, and I put my buy order straight in. It's an on-stop order, so if it triggers in the market, you can be fast asleep, and it'll put you back in. And really all I'm risking is the difference. And right now, I think the price is almost exactly where it was last week. So if you'd hung on, you're at the same price, but you've had the stress of this little dip, coincidentally back to the long-term trend ribbon, surprise, back up again. And I don't think I need to change my position on Bitcoin. I think it's exactly the same. I think there's kind of nothing to see here until we start to have big white candle closes above these levels, and then we might get some FOMO and push up to those highs. I still wouldn't rule out a move, I don't want to say 100,000, but at least one more push to break those highs. What would change that? Of course, close beneath that last trough low there would be very, very bearish, and then beneath the long-term trend ribbon, it's doing what it did last time. It did that, and if you're not sure what that looks like, let's head back and remind ourselves exactly what a Bitcoin topping pattern looks like. I think there's great value in this because there you go. It's almost exactly the same, and it's very, very similar to where we are right now, and maybe about there is where we are right now, maybe there. And then looking over here as well, okay? History doesn't repeat. but it sure does rhyme. So we've got a really good model here from which to work with, and that's why I said, you know, you could take that reverse trade or that option, call option on the level there. Look, I think we'll leave it there on crypto, unless you've got something really specific you want me to look at, and I can't see anybody asking those just yet. So let's keep moving. I happen to have the bonds watch list up here at the moment. That's as good a place as any to go next. And the reason why stocks have rallied is because we had the FOMC meeting, we had Chairman Powell once again. The rhetoric is we're not going to hike. Look, we may pause for a longer period of time. That was very much the centre of his comments, but we're still not going to hike. And that took out a great deal of uncertainty because rates were edging higher. Why are rates edging higher? Because markets are still factoring in hikes. So if you have, for the second time in a row, Chairman Powell coming out and saying, look, that's really not one of the scenarios that's very high in our agenda right now, but we could be pushing out the hikes, the cuts further. Markets are cool with that. They're okay. We know cuts are probably going to take longer, but the next move is down. As long as markets can still maintain that sort of mentality, we're okay. The stock market bull market is okay. It's the hikes that will hurt us, and that could kill the bull market, because not only to be factoring 3 rate cuts in the US before the end of the year and a couple here, now that's just truck driven through that strategy. But to flip from not getting hiked to then not getting cuts to going hike, that's what was hurting us. So that's why we've seen that pullback over the last 3 trading sessions there, and that's of course made weird and wonderful things happen on the stock market. Again, we can't see what's going to happen next. And that's the fun and the games of it all. They look like they've just sort of stagnating a little bit there, but that's also good too. And then if we head back to Australia, things were creeping higher and they're coming back also. So no red flags there for stock market bulls to worry about just yet. And anybody tells you otherwise, the world is coming to an end, I just think, that's a faulty strategy, because let's face it, most of the time it's not. Okay, occasionally it is, but most of the time it's not. So I don't think you want to base your whole investment thesis on something that happens very, 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 very occasionally. And I could have saved my breath there by saying seldom. We went up over to here, which I wonder, what do we have today? Well, we've got a 7th of May candle. That's impressive, because where I am, it's still the 6th. So I don't know how they're getting a 7. Maybe they are in New Zealand, perhaps. But we do have a 6th of May candle, which kind of indicates maybe they did trade today. Maybe Norgate hasn't got the data on that one. I don't know. Where do I want to go here? I think we're okay here. I think we've done most of those. Let's head over to the commodities. And we're going to start with high-grade copper. There you go. I wrote about this in tonight's market index evening wrap, and I said Friday's candle was good. Today's candle, pretty sure that's today's candle. Is that still? No, yep, that's today's candle. It's live. There's futures. They trade, obviously, electronically. That looks fantastic, but it's a live candle. If you can close like that, that's hunky-dory. That's a really good little push back up. I know it encroached on the second from last peak. That's not ideal, and that's why I warned you about this in that evening wrap. I said, I'm not sure about these, guys. Not the end of the world. Don't panic, but not sure about these. Okay, that's come back. That's okay. We're still in trend at this stage. But yeah, look, just keeping an eye out, because we didn't have the ideal price action there. I do like the iron ore chart though. I think that looks very interesting. So that's obviously had some time to deal with this excess supply we would expect at the long-term trend ribbon, and now with today's candle, looks like it's closing above that, and I would expect we're pretty close to a close on that one. Not a lot can really happen given that Chinese markets are closed now. So I think we'll take that as a lock of a close above the long-term uptrend ribbon, which, as you know my rules, makes us a new long-term uptrend in iron ore officially. Okay, so once we test, we pull back the good old-fashioned dink. That's the technical term. You won't find it in any textbook. The dink at the long-term uptrend ribbon, close above it. That's a new long-term uptrend for me. But Carl, the ribbon hasn't gone green yet. No. We're betting on it. It will eventually, but this is using price action to make that determination early because price action is coincident with what's happening. Yet moving average is very slow. They're lagging. Let us head to uranium, which had started to look better because, you might have read my article last week about the US Senate has banned, they've passed the bill to ban Russian imports of uranium. So not a big deal on raw uranium because those had pretty much dwindled to zero anyway, but the US is still a big importer of enriched products, both the UF6 or UF4, I forget which one it is, but it's the one that you then use to make the uranium dioxide, which you crush into pellets and put in your fuel rods of your nuclear reactors. So that is having a positive impact on the sentiment, obviously, and then the price. And we're seeing us bounce off that long-term uptrend ribbon. Hooray for the long-term uptrend ribbon. And that still looks okay. Okay for now. We want V-shaped recoveries, remember, not bumping along a base there. What else can I show you that's of any interest here? I felt that the crude oil price, I think I mentioned to you last week, and probably also the week before, certainly after these candles occurred, that this was potentially rolling in its short-term trend. It seems that has turned out to be the case. We are at the long-term uptrend ribbon. It needs to hold here, or it's going to do the opposite of uranium and fall back beneath it and back into the doldrums there. And in fact, we'll have a look at the Woodside chart a little bit later on because that looks pretty awful. Brent Crude, which was the better of the two because obviously it's more leveraged to the situation in the Middle East, looks, I'm going to say, almost as bad. And then we'd like to look at the coals, don't we? The two supermarket coals, the two coal contracts. And this was looking a bit forlorn last week, but I'm actually happy that it has perked back up as I thought it was doing so. Not so much from the case of making energy or electricity prices more expensive, but that is starting to change the trend, dare I say, and not much happening there on the coking coal. Hopefully you can see the dots, but you can certainly see the moving averages. Gold, we promised we'd look at the gold chart. We looked at the spot price before. Now these are the gold futures. I prefer to look at futures, and we can see that obviously this candle here is the key candle, isn't it? That's the manifestation of supply. All the way up here, it's just bulls, 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 bulls. Everything you read is so bullish, and everybody's piling in. And the supply side, they're very, very clever people that know really gold is just a bit of a, it's a bit of a plaything really from time to time, and we will not be paying for loaves of bread with shavings of gold anytime in the foreseeable future, and therefore they will sell that or short that or whatever. And then, of course, the gold bugs, they get all excited again, and it's just a pullback and up we go, and then we get that second pop. And then they start to lose a little bit of hope, and now we've kind of had a third pop here. Look, still holding the short-term uptrend ribbon, so there is some hope. It's 50-50 from here. I won't make a call one way or the other, but I'll tell you my gut is feeling that we are probably in a bit of a rolling situation here, or continue to be. Silver, I know lots of people got excited about silver, and give me some credit. That was up here. You're all asking me about SLV, I think it was Silver Mines, and I did say, hey, everybody, cool it, okay? Calm the F down. And I think that was quite prophetic. Having said that, this is actually starting to be a really interesting candle here for silver. It tends to be leading gold as a bit of the leverage play of the two. So if that candle closes there, it's better. It's not great, but it's certainly better than the continuing to roll scenario that I might have suggested when I looked at the gold chart. That is the whip around the grounds. I don't think I could have been any more comprehensive than that. So let us head back over here and head to your offline requests, because we understand and we respect not everybody can be with us on a Monday evening because it is late, depending on where you are. And I think it's important that I continue to do these. I want everybody to have the same access to these sessions. Each session, of course, is recorded. Now, I'm going to go to, actually, it's not that many, which is great. Last week we had a marathon session having to do 2 weeks in the one. Today I've only got the one, which is Chalice Mining from Craig. And I think we've talked about this a few times, if only as a case study for what an aggressive setup looks like. And an aggressive setup, I might have said there, it's actually starting to look a bit aggressive because you've had your big base pattern. There's your big base pattern. See that? What is a base pattern? What is a base pattern? Well, it's where you stop going down, where you've had a huge decline from over $8 to as low as, what's this level here? It's not going to give it to me while breaking the computer. There we go. 86 cents was the low. So you go from $8 to 86 cents. Now, in a past life before you met me, the battery, the computer is screwing me at me because I haven't plugged in my power cable. So let us do that so I don't disappear on you. There we go. So imagine that, losing 92% or something of your equity on a trade. In a past life, that was possible. Now that you know me, that's impossible. It can never happen to you again. Isn't that wonderful? And the base pattern is, well, we stop going down. That's a good start. We move into higher peaks and higher troughs. The moving average goes amber. It starts to flip around. I'm not saying it goes into a rampaging uptrend, but that's what a base pattern is. We start to go sideways. Ideally, when you hit the bottom, there's a bit more of a volume response. You hit it with a thud and a big burst of volume. That tells you that it tells you two things. Listen to this. This is really important, okay? That big burst of volume at the bottom of a trend like that tells you two things. Number one, the last batch of people who were just hanging on have capitulated. It's capitulation volume. It's like, okay, I've accepted my fate. I've accepted this will never go up again, and I'm going to get out whatever I can get left, because this is going to zero. Not everybody's going to think like that. Some people are going to hang on until zero, right? We know who they are. Nobody here, of course. So capitulation that is never going back up. The other part of this volume equation, it's not there, it's not on screen. Okay, this is not the perfect case study. But if we did see a big spike in volume, where that blue line is, it's the short covering. And that is equally, if not, in my opinion, more important, because what's driving this down the whole way is the shorts. The shorts that know this thing was never worth $8 in the first place. It's probably worth 86 cents, and they've shorted it all the way down. And they're much of the supply that's in that chart, to be fair. And who are they selling to? Because you've got to think, okay, well, who would buy this crap? It's people who think in terms of $8 was, I didn't buy it at 8, but now it's at 6. It must be cheap. I didn't buy it at 8, now it's 4. I can buy it now. I can get it for half price. It's those people that are buying all the way down, and they just keep getting tipped out. But that short covering is absolutely crucial, because once you get these shorts off the back of this thing, it doesn't mean it's going to rally, but at least it'll stop going down. And that's the first part of the base pattern. So what we're talking about here is trying to find a case study for an aggressive entry, because I know how much you want to know about that particular setup, my third setup. And then we're looking for big white candles, preferably on volume. So that actually starts to look like actually a really interesting place where you could have an aggressive setup. So if you took that and said, Carl, I reckon that's an aggressive setup, I wouldn't mind, but I would counsel and I would say, look, you haven't really seen that huge blow off in volume yet. Okay, and we actually kind of didn't really get it here, and I won't find the perfect setup every time, right? We've just picked this one. And then we back into lower peaks and lower troughs, so a bit of a false alarm, back into higher peaks and higher troughs. So we're warming up here. There's a bit of volume there. It might be one, but I don't think so. That's better, okay? That's better, that's best. So I reckon here, that's an aggressive setup. So that's the first point I could add risk on this trade, okay? And 1/6, half of my normal entry, which is a third, right? I think this is okay too, because it's still a ways away from your dark red zone, and that's the key. The other thing is we don't want to get in too close to the dynamic supply of the dark pink zone. So yeah, I know I've probably repeated myself a little bit there, but let me leave that one. No, if it had a really high close, a high close. See, this is fine because it's such a big candle, that doesn't matter so much. But that's very close. Definitely that one. Okay, and you say, hey Carl, but if you took the aggressive trade there, well, no, that's the really terrible place to get it. In fact, both of them were. And I say, yeah, that's true. Absolutely, in hindsight, they would have been horrible places to get in. And there you go. Welcome to the aggressive setup. That's exactly how they work. Some of them come off and they're amazing. Some of them don't. They're higher risk trades, and that's why we put far less on them. The question is, well, what do we do with Chalice now? Is it an aggressive setup now? And the good news is I've given you that explanation. I can say, no, not even close. Not even if I close my eyes, spin around 3 times, and then look at it again, it still won't be. I can't see any reason to have any risk on this trade at this point in time. And somebody might say, oh, Carl, but it's doing this and they're doing that and doing that. And I say, look, I'm sorry, I really don't care. Let's go to, that was for you, Craig. Hopefully you got what you wanted out of that one. And we're going to go to the online requests, and then we'll do the USA ones at the end. We've got from Colin, GMG. Oh, well, there you go. This is a wonderful trade, isn't it? How good is this? And we could draw arrows all over the bloody place as to where you could buy. In fact, look at that. That's a buy there because look at that. Perfect. That's a perfect buy. Look how good that one is. Look at the fullness and the whiteness of that candle dipping back to the light green zone in what was already a beautiful trend. And there's one there. Even that one's fine. That one's fine. These ones I would probably prefer higher closes, but they're not terrible either. That one's a definite. That one's a definite. None of those. That one's not bad. Yeah, I could probably go there and probably have a crack at that one. And you can see that one might not have worked out as well. And then nothing really until here and here. Both of those I think pretty good. Probably not. Well, maybe that's not bad. That upper shadow maybe just keeping me out, and this last one here, the upper shadow keeping me out, and then today is looking very good, and there you go. So plus 1/3 for me, absolutely. There's absolutely nothing in that chart to tell me that I shouldn't continue to add risk on GMG. I know many of you have it already anyway, and if that's the case, happy for you to add risk if that's the way you wish to go. Otherwise, full risk position. Hang on to what you have. There's not an inkling of a reason to sell a single share, okay, but you do you. That makes me happy when I look at that chart. This one here was going gangbusters, isn't it? It's had a bit of a turn for the worse, but not awful. If we are looking for places where, again, I know it's navel gazing, but I do think it helps some people to go, well, what would I have done in that situation, as in what would Carl have done, and then maybe also what you would have done in the situation as well. What about this? Is that a reason to sell 1/3 of your holdings? I don't think it is. It's not interacting with any major round numbers, and it's just one candle. Okay. Now we know we know it's not a good candle. We know in fact it's not just not good. It's terrible. It's a bloody awful candle if you're a bull, right? Did it come on elevated volume? Because that would tell you a bunch of people got in, and then they got smacked up. No, it didn't. Okay, so again, there's another reason why, if I look at that, I'm thinking, it's not the most liquid stock anyway. It's not the biggest stock. A little bit of shenanigans, not too fussed. Okay, next candle. This one here, so I'm still not getting out a third because of the lower shadow. This one here, it's still not that awful, to be honest. I still want to trust the trend. This one here, I'm annoyed that I didn't get out earlier now. Okay, but honestly, I still think I'm giving it a chance. Here, I'm going, well, I'm glad I did. Here I'm going, well, there's nothing to see here, nothing to see here. Here I'm going, well, I not only do I regret not getting out of the top, I wish I could see the future, but I am more concerned now. So officially concerned. Why? What has changed on that day that hadn't been there on the previous bars before that? So we've got an official lower peak. So it's not about what I think. It's just about what we can see in the market. It's not guessing. We're not trying to guess. We're saying, well, this is what I can see. I can see this now. And I can see that we know this is a point of supply. We knew that already. And now we actually have a second point of supply. And the second one is lower than the first. And the only way that can occur is if supply is building. And if supply is building, how does that make you feel about being long this stock? Well, not as happy about it. And is that enough to exit a third? No, but I would put to you, if you asked me on that day, maybe you did, I would say, look, if we close beneath this middle trough, don't forget, if you've got two peaks, if you're in the Swiss Alps and you've got two peaks, so if you're in the Swiss Alps, you look to your left, there's a peak, you look to your right, there's a peak, guess where you must be? Right, you're in a valley. So there's got to be a trough between those two peaks. If we close beneath that trough, then that's, for me, a compulsory minus 1/3. But we didn't close beneath there. We tickled it. It's supposed to be demand. We've also got the short-term uptrend. So everything's fine, okay? Even on this day here, we're still okay. We haven't exited a third. And then we get to this day. And that's the day for me. I go, look, I can't wait any longer. To wait any longer really is tempting fate. So that's my minus 1/3 day, okay? Now, the next candle, I think, is just as bad. So this is just me, and you can do it any way you want to do it. And I'm going to go, look, I've given it all the opportunity in the world to do what I want it to do. It hasn't done it, and I reckon that's it for me. There on the second, third, and then for me, and again, you might prefer to go a different way. And remember, this is not a black box is not the right word. It's not an algorithmic system in that there's a hard and fast set of rules. It is somewhat discretionary. But my job here is to train you to have the same discretion as me. And if somebody really feels badly about being all out by that candle, please let me know in the comments and say, no, Carl, I think I feel differently. I would like to do something else, and let's have a chat about it. But for me, that's where I think I'm done. I'm finished. I'm going to move on, and I'm going to find something that is more deserving of my capital, okay, on that day there, because we all know there's lots of wonderful charts out there on any particular day. And why would I continue to persevere with this one when, to be fair, it doesn't really deserve. I mean, we've given it all the chance in the world. And many people were on this one. They've had a great trade. That's fine. Do I regret it today being out at that point? No, clearly not, actually. Don't regret it. Do I need to get back in? I'm actually seeing a really good candle here. Is it enough to get me back in? I don't know. What do you think? What's the price action like? Well, we do have rising troughs. We're very close to rising peaks. We have had also, we have also had an interaction with the long-term uptrend. Well, we haven't really, but it's pretty close. Certainly we're getting some dynamic demand in that zone, I reckon. But look, I think it looks fine. If I have to give this a score out of 10, it's better than 5. It's probably a 6 because we do have that big long-term uptrend in place. It's well established. I mean, it's very strong. It's clearly a quality stock. But we do have, I would say, just at this stage, a predominance of white candles coming back in. The high troughs are in place, and today's candle is actually very, very good. Not seeing a lot of supply removal at this stage in the volume because there's just not a lot of interest. But I think if you can close above this peak here, and let me draw it for you. So close above there, and ideally we see a little bit of volume remove there. So we see, let's say, a volume bar that's at least 50% bigger than the one we saw today. Then I think you could go plus 1/3. And that's all we're doing. We're not saying, all right, Mary, let's say you're married to Mary. John, if you're married to John, got to call the bank manager, tell him we're taking out another mortgage on the house, I'm buying Acrow Formwork. That's not what we're talking about here, right? If we get what we want, we'll put another third on it. We'll see how we go. Ladies and gentlemen, that's as complicated as your life needs to be in the market. Like, just everybody, just take a deep breath and just go, you know what, I feel better about life now. That's as complicated as life needs to be in the market. It never needs to be more complicated than that. Let's go to the next one, which is NIC. All hunky-dory here, happy days. No reason to do anything on this one but FRP. And could you add risk to this? Look, I don't mind, but we can see the elephant in the room is this big resistance zone here with supply. 2 points of supply in the past, or an area where we've had one here and one here. It is a major point of supply because there's an uptrend here and a downtrend there. It's just stopping me from adding new risk, that's all. But if I had it full risk position, no complaints. Looks great. And maybe it's starting to turn around because that nickel chart, isn't it? That's starting to hold its long-term uptrend and turn that trend around. Let's go to Perry. We'll do Perry's got some Aussie ones here. So we'll go to TSO. Oh, love it. I think this is a plus 1/3 for me. All I'm worried about, and it's only a minor concern because I don't think it's going to prevent me, because I love what's happening over there on the right, is just that. It's not our first time at 5 cents. Look, I think there will be a few people that want to get out at 5 though. Is it going to keep me out? No, I don't think it is. I think everything here is so strong. It's just sort of a balance of evidence. Okay, everything here is so strong. All of these white candles, great price action, and I think we're all very good here. So there is actually a little dink there, and I know it's maybe tightening up a little bit there, but it's not the most liquid or cleanest anyway. But happy to go 1/3 on that one. Let me get rid of all of that stuff and go the only thing that needs to be on there, which is plus 1/3 from me. Okay. Trends. So this is a turnaround setup. So it's looking like a pretty textbook turnaround setup. And what's actually quite impressive is what's happening down here too. Okay, so we've got some interest coming back in on that one. So there's Tesoro Gold, everybody. Which, I'm kind of wondering now, should I be worried about buying gold stocks when the gold price isn't looking as good? And the answer to that is no. Okay, if the chart looks good, you're trading this. Don't worry about what gold's doing. Let's go to the next one, which is LRS. So we're talking about Latin Resources here, the lithium company. Last week I said it's starting to look good, isn't it? It's starting to look good. I don't want to say it looks good and it looks okay. Starting to look good, but not shooting the lights out is where I was going with that. And I still don't think it's shooting the lights out. It looks good, but not shooting the lights out. Hey, I might have said something last week along the lines of, if you've got it, I think you can hold on to it. If you don't have it, I'm not sure this is the most exciting one out there. But certainly FRP if you've got it. Let's go to MAQ, which is Macquarie Technology Group. I'm not sure why I was drawing these down arrows yesterday. I was probably saying something like, because of the black candle, beware of a lower peak. I don't prognosticate, so you know I wasn't saying this is what's going to happen. That's not how I operate. And actually, there was an arrow there, and that arrow there would have been, my words would have been something like, if it closes beneath there, we're minus 1/3. Look, it never did close beneath there. In fact, we've got the most wonderful white candle today. And this, I cannot fault this chart. So this is a compulsory 1/3 for me. Of course, you need to do whatever you need to do. And the weekly chart makes it look even better. That is certainly the best chart I've seen today. M4M, I picked this up today. Perry, I don't know if you've read my article on 52 highs and lows. It's something that my colleague Kerry Sun normally writes, but Kerry is off because he is having paternity leave for the birth of his first baby. He's had a little boy, so congratulations, Kerry. I know you can't hear me. But I wrote this article here, and Kerry normally writes this one, 52-week highs, 52-week lows. But I did it this time, and I did the scan, and my scan's way better than anything that Kerry's ever produced, I can assure you of that. And I found way more stocks than he normally does. And these are all the 52 highs and lows. And then if it's got a Y there, that's your all-time high. So this is your shopping list, ladies and gentlemen. Just go through these charts. But then I did go through these charts and then put my own, my own personal sort of view of the world on it. And I thought those were the best ones out there. And funnily enough, macro metals, there you go, was one I also pointed out today, Perry. So that looks good. And Mayne Pharma also looks good as well. And then we go to the cooked like chicken dinners, the sinners. And those ones there, and Woodside was on that chart. So let's go back here. Actually, I'm going to put that somewhere else. I reckon we're going to be okay on time today. I don't think we're going to have any major issues. So if you'll indulge me, I'd like to look at some of these charts. So let's go back to here. And I am in the process of answering one of your questions, of course, with macro metals. Plus 1/3 for me. No complaints there. 1/3 for me. Let me move that over. So that candle there. And Perry's last one is, I've lost my place. No, that is Perry's last one there. Peter's got some coming up, but before we do Peter's, I just want to go through some of those charts that I picked out. Obviously 360, I think still looks, magic, like, everything I'd like to see in a chart. And then I picked out Bannerman, uranium stocks. We know they're doing very, very well. I think Silex also in that vein is doing very, very well. Mayne Pharma NYX is a nice base pattern. Didn't have the greatest candle today, but that is a really nice base pattern there. So it's just sort of just working and ranging and building up, I think, using that area as a foundation to move to another higher level. And RPM also looked very good. No, clearly not that one. Oh, I've made a boo-boo there. So is that RUL? Oh, there you go. I need to change that, because could you imagine people following me in the article and typing in, because I put RPM. Did you see that? I actually put. Oh, no, you can't see it. It's gone. It's gone forever. Okay, but I put RPM as the code, which is a bit of a understandable but rookie mistake. And I need to go change that, because can you imagine people going like a Carl trade and going RPM and seeing that, go, what the hell's going on? And SFR, which also, well, it actually didn't close as well as I thought. I took that snapshot before the market closed. Could have closed better, but still obviously a very good chart. And some of the ones that are looking pretty darn awful, I think, are worth pointing out, because maybe people out there that are trading CFDs that want to go short. And I think any of these for a plus 1/3, just to help balance out the portfolio, are probably fine. Corporate Traveller, Nine Entertainment, I think that one's better than the first one. TLS, Telstra, I mean, that looks bloody awful, doesn't it? TRS is the, good, okay, getting the thumbs down, here we go, back there. You didn't miss anything, because I said, all we saw was bad stuff, because we know RUL. RUL was the good chart, we know that, and that looks good. And Sandfire Resources, I said, closed off the high. But then I was showing you the bad ones, the not so good ones, which corporate travel stood out to me. NEC, Mining Entertainment, that just looks terrible. Telstra, geez, looks terrible. The reject shop is being rejected. And Woodside, I was surprised actually to see that, because the oil price doesn't look that bad. And, you know, it actually had a little bit of a run there, and yet Woodside has been absolutely rubbish. I haven't looked at that chart for a while. And Woolworths, which looks pretty awful as well. So a nice range of setups there if you're looking to behave more like a hedge fund, so to actually try and play both sides of the market. Let's head over to Peter now, who's got S32, which I do like this one now as a turnaround play officially. I'm pretty sure I mentioned that last week, and I said, well, that's where it officially becomes a turnaround play, and it's even more official there. That's a wonderful, wonderful candle, and I've only seen wonderful candles since then. So yes, for me, full risk position if you got it, plus 1/3 if you don't. No complaints on that one at all. Let's go to WTC, which actually, there you go, it's actually started to come back. It looks very interesting. Not completely different from that Acrow Formwork, is it? In that we've had reasons to take risk off the table in the past. You can see closing beneath there. So certainly I think that's where you would have done it. We mentioned in the past. And there's another minus 1/3 there. I'm not sure we had another reason to do another third. So at most you've probably got a third. And I think today you can add back a third. I don't mind that. Okay. Obviously we've got a bit of supply coming in here. It could have been a better close today. But look, the candles are good. The price action could be better, to be fair. I don't know. I think more than happy to hold the third that we'd be allowed to have. Whether we're going to 2/3, I'm going to leave that. I'm going to take the easy way out. I'm going to leave that to you. Let's go to BOE, which I think is very easy. I might have said one more little dink, a little dink. I don't think we got a dink. It just went up. Sometimes that's even better. So no complaints here. Plus 1/3 on that one. Full risk position if you've got it, or adding risk if you prefer. And silver. I have covered silver. Peter, it kind of looked half interesting today's candle, but it needs to close on its high and above that short-term, above the top of the short-term trend ribbon. From Adam, hi Carl, can you look at WR1? Certainly can. It was looking really great last week. We had, well, maybe not last week, maybe the week before, whenever this candle was, it was looking great. And we weren't far away from a big point of supply. That would have been the only issue that we had with it. We're having lower peaks now. Let me get rid of, I want to get rid of these arrows because I don't think we need them anymore, but I want to put back that big point of supply because I still think that's relevant. And I'm going to draw, see this peak here, that little peak there, and that one there. That's where I'm going to draw it to. And I'm going to extend that. Okay, so what's going on now with the price action on this one? We have got lower peaks. I think that's pretty clear. Try that again with my peak and trough drawing tool. So we're going to go here, here, and the next one is, well, that's uptrend, inside, outside. So this is all still the same trend, but we do actually get a downtrend here, I reckon. That low there is 123.5. That low there is 123.5, so it's not. It's the same. So this is all still part of the same trend. We go up to here, and then we're down to here. We don't know where this current downtrend is going to end. And we're going to draw a line across there because that's what we're supposed to do. When we have two peaks, we draw obviously the trough in, and then we write the letters POS on that one. We write the letters POS on that one. We write the letters POD on that one, and then we write on the screen. Even if it's just to remind us that we have an obligation to do something which is close, less than there, be minus 1/3. Is there a reason to be out a third already? I'm going to say there is, because of the nature of these. So this second, when you have a second peak, the lower peak, watch the candles there. I've said to you this many times. Watch the candles. If you're getting a really bearish candle on that second peak, and then you get the follow up, for me that's enough to go a third. So actually already, so you're already a third. So that's your first third out. Let's say you're 3/3 on this. Let's say at point A. Okay, so it's at point A. At point A, you had 3/3. All right. So minus that's your. Let's go point. We'll go X, Y, Z. Right. X at point X. That's your first third. Okay. And then we don't have Y yet, but where's Y? Y will be here. Okay, and Y could be Z, because if we got another bad candle before we got there, you could go early, but if not, then Y would be your second third, and your Z could be if, for example, and we don't know the future, but hypothetically you had a big black candle. Let me draw it in so you can visualize it. So let's say you had a big black candle that closed. I hope this doesn't happen for you, but you know, we're here to learn, and we're here to learn pictures, really, through case studies. So if we had the big black candle that closed, not only did we close beneath the point of demand, which is your Y, your second third, but it ended up being a really bad candle, then the next day you would go your final third. So I'm just trying to give you a path, an exit plan, okay? And with every stock you're holding, you should have a plan just like this, and you may need to update it day by day based on the candles that come, but that's your job, that's your work, that's what you've signed up to do. If you don't want to do that, stop trading, or just go back to I don't know, Warren Buffett value investing, whatever the rest of the crew do. If don't be half-hearted with this, you can't be half pregnant with this approach. I think have a plan for how you're going to get out of everything. Because I think by having it and writing it out, if you write it out like this and you print it out and stick it on the wall where you do your analysis, it's kind of hard to hide from that, isn't it? When it's just staring at you on the wall. Let's go. The alternative is you don't have a plan and you're just hoping for the best. That's not what we do, okay? That's what gamblers do at the casino. They just hope for the best. Let us go to here, and I can't see much of a reason to do much with this one at this stage. If there was any excitement, it might have been on this candle here, but there's very little volume and very little interest here at this stage. Look, if I had it and I believed in it, which you know is not me, I could hold on to it, but it's not very exciting, is it, at this stage? You could almost trade it like Bitcoin, where you get out here and you just commit to buying it back if it ever closes above 20 cents. Think about that for a second. Think about what that means. You are giving up 4 cents. That's not an insignificant percentage amount, but you're giving up 4 cents on this trade to not have to worry the flip about it. Can you imagine just not having to look at AW1 tomorrow? Who's this for? Adam. And not looking at it the next day and the next day, really not giving a shit about it. But you know that if it does close above 20, you'll just get back in. Because if it closes above 20, it's probably going to 36, right? If it does go to 36, who cares if you missed out on 4 cents? It's not a bad strategy when you think about it. Okay, let's go to Nicola. Nicola's got FMG. I like this. I actually think this looks really good. It's done everything we want it to do at that long-term trend ribbon. Like, hooray for the long-term trend ribbon, right? It's doing its job. I'm at plus 1/3 here, and I like the fact that it's matching up a little bit with that iron ore chart as well. So no complaints at all. Maybe I would have liked a little bit more volume, but I think that's fine. I'm a plus 1/3 on that one, Nicola. And S32 we've actually talked about before. I'd happily add both of those, but always keep in mind you can have too many mining stocks at some point in time. Oh, blasphemy, Carl, don't say that. We're Aussie investors. We can never have too many mining stocks. DXB, this one's for Michael. And I think this looks really good. I know today's candle isn't ideal. And we've said yesterday's candle is ideal. It's perfect. In fact, that would be Friday's candle, of course. But this is very good. Look, next white candle. I think there's no rush after today's candle, but next white candle, more than happy to add some risk on this. I want to check the weekly chart and see if there's anything nasty hiding off over there on the left. And I don't think there is, so I'm not worried about that at all. So next white candle on plus 1/3. If you've got it, happy to run with a full risk position at this stage. Veem, this is another one which still looks very good. I was going to say that's the weekly chart. I'm in the wrong place. Okay, I think that looks really good. what the hell is this one? VMM. We've obviously looked at it in the recent past because not that long ago I wrote plus 1/3. I don't think any major reason to minus 1/3 just yet, although you might have been, no, you're probably not close there. You're still above the short-term trend ribbon. I'm still happy with that. So, yeah, I'm going to go ditto, and this is purely by accident that we're here, but I reckon that today's candle's pretty good. Yeah, I don't see why not. Now, I'm going to go to the one you did ask me about, which is it not VMM? You've typed in VMM, Michael. So Veem is a different code. Please let me know, unless you meant that one. But you've actually, oh, maybe you did. Maybe I'm getting confused. I'm thinking about Veem and you're talking about this. What the hell is the code for Veem then? Because that also looks good. Where is it? Oh gosh, Veem. Somebody type it in for me. Veem. You think it'd be there. VEE, there you go, thank you. From Adonis, always on the ball. VEE. There you go, that still looks good, doesn't it? Full risk position. Haven't had the most ideal candles, have we, since then? But nothing in there to suggest that we shouldn't continue on that path. So apologies, Michael. I'm sure you meant VMM, and I like it. That's the good news. Let's go to... Michael's actually got VEE next. I'm not kidding. So there you go. I could have just looked at the next one, would have had it. Mineral Resources, which, yeah, if you followed my technical analysis, I've said it's the only lithium stock which actually looks good. It looks even better now, but I think it's behaving as an iron ore stock. Okay, so this one looks fine. I'm a plus 1/3 here. This is the candle here, that one there, plus 1/3. That is the plus 1/3. That is also a plus 1/3. And then today is also a plus 1/3. So if you have been suffering on this one for a while, good news is Carl likes it now. Carl likes it again. And this is the key here. That's the perfect, oh, that's so good, isn't it? How good is that candle? And look at that shadow. Right there, right where it's supposed to be on the almighty long-term uptrend ribbon. And we can see how it works. When before this did it really master that long-term uptrend ribbon? It hasn't. Look at this long-term uptrend just doing its job. You just want to wrap yourself in this long-term uptrend ribbon, and it just keeps you warm and safe at night, doesn't it? Let's go to the next one. I want to have a look at lithium now, actually. I've drawn a few lines on that one. Let's get rid of those so I can see what's going on. That's a bit more ho-hum. It's not awful, but it's not as good. So I think that's an iron ore thing going on there with Mineral Resources, not a lithium thing. That is very range bound, but I don't think that looks terrible. I think there's quite a few white candles in this range. Not going to say anything more than that because I don't think it warrants it. But it doesn't look as awful as it did not that long ago. And then we've got stuff like Liontown, which it's no real need to get excited about at this stage. But I thought Vulcan's starting to shape up, actually. This is starting to look really interesting here as a turnaround play, isn't it? So, yeah, keep an eye on that one. I think I'd almost go today. This is a pretty important zone of supply, isn't it? So you might want to wait for another high close. But I'm very, very close to pulling the trigger on that one as a turnaround play, just in the interest of mixing up setups. No, that's still not very good. And I can't think of any others that are worth looking at. WC8, WC8. No action required there. PLL, but these are all toast. That's why I'm not. If you're screaming at me going, Carl, say oh no, Carl, call. There's nothing to see there at all. Let us go to Peter. Yes, I'm a Trekkie as well. Are you watching the other one, Strange New Worlds? I haven't got round to those yet because I'm working my way through the back catalogues of the other ones, but I am going to go to those next. YNN, that must be a US stock. We'll do that one later. Hi, Carl, can you look at ASX SIG and IZZ? Certainly can. This one is for Max. Still looks good. Of course, this is the Chemist Warehouse backdoor deal. I don't know when that's actually going to take place. I don't think it has yet. It looks fine. It's just not shooting the lights out, is it? But certainly a full risk position at this stage. I can't see any reason why you'd run less than a full risk position. I'd start to get concerned on a full black candle close beneath there. Okay, that's where I'm minus 1/3, and then I don't think I'm minus 2/3 by then. I reckon I'm all out by then. Okay, I'd find an excuse to be all out on a close beneath the second arrow there. So minus 1/3, and I'm going to go minus 1/3 there, but in brackets really, minus 2/3 at that stage, I reckon. Let's go to the next one, which is IZZ, which is the China. Well, there you go. Honestly, I didn't even connect the dots and think we had this, but yeah, you could have actually been trading along at home and gotten into this, and I hope you got in a little bit earlier. But no, that's fine as well. I think that's one way you can play it. I think it's I think you can play it, but understand that we still do have some points of supply that probably will come into play. But no objections at all. I'm happy with that one, running forest position if you have it. Let's go to SXE, which obviously is, I'm glad you brought this one up today, because last time we looked at it, obviously I said FRP, I didn't just go and type that in just before the start of today's session. We looked at it last week, I remember, and I probably said something along the lines of no reason to sell a single share, and there you go. Profit upgrade or some news today, who cares? Honestly, it's completely irrelevant. Do you need to do anything with it today? Look, it's a 150. Is 150 a round number? Not really, as far as I'm concerned. About $2 is certainly something I'd be locking in some profits at. But that candle is a perfect candle today, isn't it? It could, well, not perfect. It could have a white body, but it's a very, very good candle. With the gap, it's so close. It's closing so close to the high of the range, including the gap, that it's 99 out of 100. So 100%. Let me just go copy paste here. And isn't this a weird thing? Because I wonder how many, if you called up your broker, and let's come on, let us really channel our best broker phone calls here that we've had with our brokers in the past. Some of you maybe haven't, because you're too young and all you've ever done is gone tappity, 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 and you've online traders. But for the people who are old like me that have had conversations with their broker, let's say by some freak coincidence, your broker got one right. Okay, I know you just had a little bit of a chuckle there. You've probably just blown half your coffee onto the computer screen. But let's just say he got one right. And he calls you up, right? Because normally you've got to call in, but he calls you and say, hey, Southern Cross Engineering, it's at 150. How good am I? Is he telling you to hold on to it, or is he telling you to sell it at that stage? Give me a thumbs up if he's telling you to hold it, or give me a thumbs down if he's telling you to sell it. And I shouldn't be sexist here, because you might have a female broker as well. I'm getting about 1 million thumbs down. So you don't call your broker. He's called you. Hey, guess what? Boom, boom, boom. Get out. Okay, because you got one right. Now, what am I telling you to do? I'm telling you to hang on to it. I can't see any reason why you would sell a single share at this stage, because that's still an amazing candle. I can't see the future. I don't know what's going to do tomorrow. Let's go to SPZ. Imagine if I had clients. Could you imagine if I had clients? And I said, can you imagine? And I said, look, I actually don't know what's going to, I don't know what's going to happen tomorrow. I don't think I'd have many clients if I was a stockbroker, ladies and gentlemen. I can't, what should I do this? Well, I don't know. I don't know what's going to happen tomorrow. But the trend's going up. SPZ. Smart parking looks good to me. No complaints. FRP. Would I buy some here? Well, not on that last candle. That last candle is just a bit ho-hum. But this is still fantastic. FRP. And look, I don't mind you asking me these, if only to just make you feel better about hanging on. That's cool too, isn't it? If all Carl does is FRP, then I think there's some value in that. Let's go to ANZ. No, that's a mistake, but that looks okay. No complaints about ANZ. I want to go to ANX. Okay. I think this is an aggressive setup here. It's kind of still too early to qualify as a turnaround play, isn't it? Because we haven't really had the dink at the long-term uptrend ribbon. The long-term uptrend ribbon is still very much red. So I know we're not beneath it, but it's kind of a bonus we're above it. I think we've had a base pattern. I think we've had sufficient sideways movement. We've had high peaks, high troughs. We've gone back to a short-term uptrend. We didn't really get the volume climax at the bottom, but we've certainly had a good push of volume here to get us going again. I can't see anything here this is a pretty good aggressive setup. It's close to the perfect sort of case study here, actually. It's not your typical one, but it's got everything I want to see. So 100% yes for me. Now, because it's an aggressive setup, it's more of that for me. Okay. And as the candles continue to print nicely, I'm happy to add risk on it, but I think that's where I am on that one. But hey, you do you. If you want to go more, that's your choice. That's for Brent. Thank you, Adonis, for telling me Veem is VEE. We're going to Haraji, which is CU6. How are we going for time? I better check, because I'll keep talking if you let me. So stop typing in any new ones. Okay, and we're going to head back up the list and we're going to do our US ones. Now, let's get rid of some of this stuff here. I don't think I see any minus 1/3 in there, so that's all good. These two candles are terrible, and I probably would have gone a third just on those two actually. And I'm not sure if I would have got a second one out until maybe here, which would have been very frustrating. But I reckon you following my model to the T, you still would have had a third on it, and then you probably would have put a third back in here, and if not a third there, and you'd still be on it. Could you add risk on this last candle? I don't think you can, because I think you're too close to $4 now. $4 is a round number for me, so I think 2 is important, 4 is important, not 3. I don't think there's any relevance on 3. Funnily enough, the chart is kind of telling you there is a bit of relevance on 3. But for me, it's not as relevant as 2 and 4. Go read the studies. The studies say human brains deal in even numbers. So 2 is more important than 3. 4 is more important than 3. But 5 is important too. Then 10 is important. 15, 20, 30, 40, 50. And then really it's not a lot after 50 is there. Because I don't think people go, oh, please, God, please let this go to $70, But absolute FRP here, no complaints. For me, not selling a single share just yet, but I think I'd be looking very closely at what was happening at 4 to at least get some risk off the table, but also still to continue to hold some as well. JD in the US will do that one, Haraju, after the next one from King, but King is also coincidentally asking about CU6, so that's nice. He's saying, if I haven't done it already, up on really good volume with blue sky above. Yes, full risk position. Okay, we're going to head back up the list. So if you do type something in, I won't see it, unfortunately. But I'm going to go to my trading view platform, which I will now have to boot up again because I moved the screen that it was on. I moved it off, and OBS has lost it. So I need to go to here and get my default things going here. Okay, so let us go to JD, which is what JD Uniphase, I'm guessing, JD.com, I'm mistaken. As a turnaround play, so it's progressed more than aggressive setup, but it is definitely a bona fide turnaround play because we've got the dink in the long-term uptrend here. The long-term trend ribbon has turned amber. It's not uptrend, it's neutral. We've got a dink in it. The candles are good. They're predominantly white. The price action is excellent because this last trough here is at or above the second from last peak. In fact, this last trough is at or above this whole band of supply. And look how well this old band of supply is acting now as demand. So that was your old supply zone through there, and now it's acting as a demand zone. Let's look for other supply zones to worry about. I think that's probably the main one, and therefore it's miles away. I'm not worried about this. And for me, this is a plus 1/3 here, so I'm going to go plus 1/3 on that one. Let's go escape. And now I have to remember, if I save that, I don't think I break this. Now, I'm not the expert on trading view, but I reckon if I save that, it'll remember it for last time. I'm pretty sure I have to do it after each one, so let me remember to do that today. So we can come back and say, oh, look, that's where we would have got in, and how did it go from there, for better or for worse. Let us go now to... I don't think I did yours, Adonis. I'm very sorry. So I'm going to go back here very quickly, and he was very kind to help me with VEE, and then I've forgotten to do his stocks, which is AMC, which is very interesting actually, Adonis, because it was looking terrible for such a long time, but it's had its quarterly report, if I'm not mistaken, and it's actually had a really good candle. So this is the one I'm referring to there, and that is very, very impressive. And then this gap and run I'm equally as happy with. I think this has actually turned the corner. Adonis, I could add risk to this. I think so. I'm going to go plus 1/3 on that one. Or is it more of an aggressive setup still because I haven't had the dink? Look, I'm going to go on the strength of the gap and the white candle, and the predominance of white candles before that, actually. I think this warrants plus 1/3 for me, Adonis, so I'm happy with that one. Again, just in the interest of getting a mix of setups into your portfolio. QUB is the next one. This is more of a continuation play, and go to normal. No complaints here. Full risk position if you've got it. I can't see any reason why you wouldn't run a full risk position. That is, I can't see any reason why you would sell a share. Would I buy some? Look, next white candle. Today's candle is good, but in combination with Friday's candle, there's a little bit of supply lurking in the system that I'd like to see taken care of first. And then Adonis, of course, has a VEE coincidentally in next. So that's yours. Let's head back up the list then. And I'm going to go to... Okay, here we go. Andrew is asking a question about returns. And Andrew is saying, hi Carl, could you please discuss the returns you aim for in percentage terms in your trading method and touch on filters you use to remove rubbish stocks from scans other than price action, i.e. liquidity? Okay, so let's go in reverse order. So liquidity is the easiest one to answer. So I normally look for a turnover filter. So it's volume times the closing price. And then I'm looking for, if you run it, and most of your trading languages, I use Amy Broker, but you'll have the ability to do a moving average, right? So if you do a moving average of close times volume, you're taking the average of turnover over whatever period you specify. And I usually use 21 days, which is a month. There's literally, on average, 21 trading days in a month. So if we go, and you can use a simple moving average, exponential. It's not going to matter for this particular application, but whatever. Moving average of the turnover over the last 21 days and have that be above, it's up to you, okay? Now, it's up to you because obviously the higher you make it, the more of the junk you screen out, the lower you make it, or you screen it out, but then you miss stuff. The lower you make that turnover filter hurdle, you'll get more junk, and then but you won't miss anything. So I don't know what your time constraints are. So that's why I need to say, Andrew, you need to just get a feel for that. I would say start around $200,000. I think that's a really low hurdle. Okay, if something can't trade 200 grand in a day, I think you've got a bit of a problem. Start at that and see if you'd like what your scan gives you. Okay, and then either drop it down to 100 or remove that and see what you missed out on, and see if you can live with what you missed out on. If you go, you know what, actually didn't miss out on anything, let's leave it at 200. You might try 300 or 250 or 300. You might step it up until you get sort of comfortable. Okay, I'm pretty happy with what I'm getting, and I'm okay with what I'm missing out on. Start with 200 to see how you go. Okay, the next question is returns you're aiming for. I don't really have a target return because I don't really know what the market's going to give me. I just go through much like I show you here, and the market will give me what I get. Okay, I don't know what's going to happen tomorrow, so I'm not aiming for a return. Hopefully I get to the end of the year and I go, well, I did better than just leaving my money in the bank. Okay, and if that's not the case, then you really want to consider why you're trading. Maybe you're better off just putting your money in the bank. Okay, but then also ask, well, was it the system that was faulty, or was it me that was faulty? Okay, one of the two is probably going to be more likely to be the problem there, the weakest link. Wayne, I missed yours as well. I don't know how I missed all of these. I'm going to nip back here, do Wayne's EOS. EOS. But two fantastic questions, Andrew. Hopefully I've answered them to your heart's content. If I haven't, then let me know. Let us go to electric. I think we've got some problems here. What do we say last time? We got all sorts of minus thirds on this one. So it is it is on the naughty step, isn't it? Remember the nanny, what they call her, not Fran Drescher, the other one. There was a show, and she used to put the kids in the naughty corner. My wife and I used to watch it many years ago before we had kids, and we used to say, surely this is unnecessary. And then we had kids, and all the rule books went out the window. The naughty corner, the naughty step doesn't work. Let us go over here and look at, is there any reason to be adding risk back to this one? I don't think so. I don't think so. It's not far off, like 3 really good shadows, 2 really good candles, 3 good shadows. So there's some good stuff happening, but I'm still really worried about this candle here. Really concerns me. So that one there. I'm not ready yet, but let me just see something that looks, even if we can just get above that short-term uptrend, short-term trend ribbon, and have a little pullback to it, hold it with a nice candle, and then the next white candle from there, I'll be more likely to go. But I reckon this is it. I think I want to see a high candle close near there. And I know you're giving up a bit, but I think you might have to. I don't think this is an aggressive setup, but I can see it's starting to be better on the basis of those last three candles. But for me, I don't think I have the confidence to go yet. Okay, going to try not to screw this up and be in the right place. I'm so sorry for missing those, for the people that I missed them, and I'm pretty sure I'm back on track now. Let us go to the next US stock, which is Michael, and Michael's asking for YNN, which is not going to happen if I do it that way. It needs to happen if I do it this way. China Bull 3 times. Okay. Yep, I didn't know this existed. It's a yes for me. It's definitely a turnaround setup, but we know that I guess the setup here is less relevant because it's a derivative, right? So yeah, we looked at the Aussie one, the IZZ, before, didn't we? And I reckon there's probably more juice in this one than the IZZ, to be honest. So that's a yes for me on that one. Thank you for bringing that up. That looks actually really interesting. That one, let me remind you, was from Michael. Let's go to Perry's US stocks now. And Perry has first up GGAL, Grupo Financiero Galicia. It's a Spanish company, which looks magic. I'm just going to go to the weekly chart to see if there's anything I need to worry about. We're not that far away, to be fair, from... I think it's a little bit relevant. I know I'm hedging my bets there, but I think there's going to be some relevance for it. But it is starting to get, it's like it's 4 years away, so it's probably not that relevant. Is it going to stop me from pulling the trigger? No, it's not. No, I think I can go plus 130, and I do say that sincerely, and I do consider these things and weigh them up. I'm not taking them lightly, so I have considered it, and I think we are okay for plus 1/3 on that, and that is not supposed to be 1 1/3. That is a typo. It'll be rectified now. Let us go to PRMW. So great trends there, obviously. Immaculate price action, predominance of white candles, everything I want to see, and ditto for this one. Let me head over to the weekly chart to see if there's anything I need to worry about out there on the left-hand side. And there isn't. I know you might say, oh, Carl, that's a problem. No, it's not, because remember, all I'm after is white candle close near that level. The old-fashioned way of doing it, I did this for many, many years, is to wait for a close above that level or wait for it to tip that level with an on-stop order, etc. I don't do that anymore. I think it's wasteful. High close near that level is enough for me to say, look, if I worried about it, they would have done something on that candle. They didn't. So this is all good for me. I don't need to go any further back than that. I think that's just wasting your time and energy. So 100%, this is a plus 1/3 for me also, and I should remember actually to go plus 1/3 and then to save these. So let me go back to YNN, and just so we can have some sort of reference for them next time we look at them, plus 1/3 on that one, escape, and I'm going to go save, just move that to where I can see it, and save it again, and then go to Perry's last one, which was GGAL, and let me put plus 1/3, because you can, it's still there we go, save, and I'm going to go to your third one now, Perry, which is RXST, and anytime I see, gosh, that's frustrating, RX in a US stock, I think it's a pharmaceutical stock, but it's not this time. That looks great. Let me go to the weekly chart. Nothing there. In fact, it's fairly new, which makes me like it even more. We're nowhere near any round numbers. I must have I didn't check on the last one, but I'm sure it's fine. And I'm a plus 1/3 here. This is a great base pattern. Price action's good. Yes, we're going to have compression beneath the point of supply, which we did, so that's okay. But we're pushing through that really well. Great candles. Long-term trend, short-term trend, all good. No complaints. Plus 1/3 for me. Escape. Let me bring that visual order to the front and click save, and I'm going to go to Perry's fourth and final, which is SFM, Sprouts Farmers Market. Love it. Amazing, no complaints. Love the gap. Love the gap. There's your base pattern. So when I speak about base patterns, that's about as good as you can get. You know, you can see it's just basing and rallying and basing and rallying. Let me head back here. I doubt I'm going to see anything there or not. So confirming for me on this one that I'm also plus 1/3. No surprise, 4 out of 4 from Perry. Very good. Thank you, Perry. Let's go to front, click save. Let us go to the next US stock, which is, it's actually offline. It's 100% offline. I cannot forget. And actually, we've got an Italian stock coming up as well to go with our Spanish stock. So Craig's got NVIDIA. Last time we looked at NVIDIA, I said a cheeky long. How's that looking now? Same, no complaints. I still think it's a cheeky long here. Would I be greater than the third that I would have added last week? I don't see why not. I mean, look at Friday's candle. I don't see why not. So let us go plus 1/3, plus 1/3, and then let's do another plus 1/8. No, plus 1/3. Escape, and move that one there. That's what I said last week. And then we're going to go here and click save. So no complaints on that one for you, Craig. And then Jason has a few for us as well. CMRE, Costamare, perhaps, and that looks very good. No complaints. Going to head out to the weekly chart. And no, nothing. I'm not too worried about that. I think this is the next level up. Look, $15 is the place that we might see some sell side pressure. We're at 12.50, so no complaints there. Look, great price action through to here. You might want to wait for the next pullback to the light green trend ribbon, but that may not come given the candles are so good. So yes, no complaints on that one. Save. Jason, your next one is ITRI. That's the risk I take, isn't it, by doing it that way? ITRI, Itron. Oh, magic! Oh, what a great last candle. That is perfection. Yeah, there's a bit of an issue here up at 122-ish, isn't there? Which may come into play. Is that enough to dissuade me from what is ultimately a perfect candle? Well, to put it in perspective, I think we've still got plenty of room to go. I'm sure I could make 1-to-1, couldn't I? No. $12. I reckon I could. If you measured it out, I'll let you do that as homework. But I reckon we can, and I'm going to do it anyway on the basis of that last candle. So I think we can get 1-to-1 on that one. Let's go to Jason's. Jason's got a few for me here. WLFC, Willis Lease Finance Corporation, also very good. I'm looking at the price section. I'm seeing a lot of sketchiness though, and that makes me concerned because often with these you get a move and then you get nothing for a very long time. So I'm a little bit less enthusiastic about this one, and there's not a whole lot of movement anyway when you kind of look at the scale that we're working with. And then we've got a big point of supply not that far away up at $60. So I'm going to go no on that one. As good as those last two candles are, I'm just going to pass on the basis of the water risk. Plus, this is a big turn off for me. Those really sketchy candles. When you see candles at the open high and the low of the same price, that's yeah. I tend to keep moving unless it's just perfect, and it's not. So let's go to RGA, which is Reinsurance Group. This one is very close to perfect. Let me check out here. There's nothing I need to worry about there. That is all fantastic. And then we're back into the plus 1/3 here for Jason because this one certainly is. And do that and go save. And then we've got two more to go, ladies and gentlemen, for this evening. Tyson Foods, very good for turnaround play. Do we need to be concerned about what's happening over here, I wonder? I don't think so. I think that's our high candle close near that zone, so I'm okay with that. And yeah, look, there's a little bit here and a little bit here, but they're not like these. Okay, so that's fine. I'm not too fussed about that. And in that case, yes, I can definitely go 1/3 here also. And we've got one more coming up. And move that here and click save. And LMNR is the final one. Limoniera. Oh, wonderful chart. Let me head over to the weekly. Nothing really there. There's a little bit of a level up here, isn't there? But I think we're okay. You know, it's around 25. We're at 22. Can we make 1-to-1? Maybe we can't. maybe we can't. I'm not too worried about that because we've closed above it. Geez, it's over. It's 5 years ago. Look, I think we're okay. I think we're okay. We're going to go plus 1/3 on this one also. And I don't say that flippantly at all. I only say this because I've assessed everything and I've weighing it against my experience, and I'm saying no, I think we're okay on that one. And I'm 99.9% certain that's not it, because the Italian stock for James, this was a late call up, BMPS. This is the last one. Oh gosh, frustrating. BMPS, Banca Montepaschi Siena in Milan. Okay, and I think James did mention a big black candle, which is a problem for this one, unfortunately, because it was going really well up until that point. And unfortunately, yeah, I do think it's enough to just take the precaution of minus 1/3, but still having 2/3 on the table. So it's not a full exit, but it's a nasty black candle. Volume didn't shoot the lights out, so that's somewhat comforting. It was slightly elevated on the day before, but you wouldn't say it was a spike. So I'm going to go yes, James, as a precautionary measure. I'll leave it up to you. I mean, if you want to say, well, it was obviously Friday's close was still inside Thursday's range, and Thursday's low was above. Sorry, Friday's candles close. Friday's candles range was inside Thursday's candles range. Friday's low was above Thursday's low. So if you wanted to give it a little bit more time, if you felt that way, and go on a close beneath Thursday's candle, you really can't, in my opinion, leave it any later than that. So minus 1/3 for me. You might want to leave it until the close beneath the low of that Thursday candle, but you've still got 2/3 of the table. That is it for today. I'll just double check down the bottom. No, nothing new has come in. So let me head over to the PowerPoint and say to you that, as a reminder, it's important to remind you that everything we've discussed today is just advice. If you choose to act upon it, really consider it very carefully against your own personal financial circumstances, objectives or needs, or seek the help as to its appropriateness from a financial professional. Trading and investing is risky. You could lose money. Never forget that. And always remember that it's you who's responsible for your money and not I. Apart from that, it's been a pleasure chatting with you this evening. Thanks for hanging around. Recording will be up shortly after this presentation. All the best for your trading and investing until we catch up again, and